comments contained in this podcast do not constitute legal advice. The opinions herein are the opinions of the speakers and not the official opinion of the Hodgson Russ Law Firm. Hey there, tax fans. Welcome to State Tax Talks with me, your host, Joe Tantillo. I'm a tax attorney at the Hodgson Russ Law Firm looking to explore the nuances of state and local tax law. Here on the show, our goal is to keep tax informative, simple, and fun. So if you're ready to talk tax, turn up the volume and dive into this episode of State Tax Talks. Folks, welcome back to another episode of State Tax Talks. I'm your host, Joe Tantillo. We're here for part 2 of our episode on sales tax issues related to contractors. Joe Endres is here, Josh Lawrence is here, and we're going to pick up where we left off last time. So let's talk about documenting this process, or whether you need to document this process, and not from a records keeping perspective fully at this point, but more just along the lines of, proper certification and registration to allow you to be able to, do these capital improvements and properly not charge tax on the services and properly collect and remit your use tax. What do you need to do?
Okay, so that's a great question, and that's going to open up a whole can of worms. But before we get there, that causes me to ask, when does a contractor have to register for sales tax? If I'm a contractor, I build buildings, do I have to register for sales tax purposes? And the answer is you really only have to register for sales tax if you're making taxable sales, or you're performing taxable services, or you want to issue exemption certificates, valid exemption certificates. And that's getting into documenting the sale to your question. But the point here is, do contractors who do nothing but perform capital improvement work really have to register for sales tax purposes? All I do is build buildings. That's it. I put up new homes. Do I have to register for sales tax purposes? What do you think, Josh?
Well, I think that's open to debate because if you don't file returns, but you had no tax due, what is the real penalty there? Is there a penalty that's imposed for not filing returns because you may be selling something that's exempt? But I can tell you that I would advise any contractor to file returns and register for sales tax purposes, because we've seen a lot of audits where a contractor, took the position it didn't have to register, and because all it did is construct new buildings, and they got a 6-year sales tax audit because no returns were filed and no statute of limitations started running. And their big issue was use tax and what they owed on the materials that they should have paid tax on. And they could have limited their liability, cut it in half by actually just registering and filing returns that are zero returns. And when you file zero returns for a year, you eventually get put on annual filing. So it's not even a compliance issue.
Right.
So my favorite question before we move forward, if I'm not filing, how do they find me? If I'm not registered for sales tax and I'm not filing sales tax returns and I'm just some contractor building buildings, how do they find me?
Oh, Joseph. I mean, we had to have. There are so many ways for New York State to find you now. Let's just go with the simplest, the tried and true, the oldest. You still need to buy materials, and every transaction has 2 parties. So even though you're off the grid, it doesn't mean that the entity that sold you your materials is off the grid. And the second that the tax department opens an audit of your supplier and sees no tax paid or charged or whatever, or sees a problem that they might see it, well, that's going to open up an audit of you. So back to my question, I totally agree with Josh. There's a position that contractors don't need to register for sales tax purposes or file returns if all you're doing is capital improvement, but you should still do it because it limits the amount of time the state can go back. It's a practical answer rather than a legal one.
Right. So then, now that we've established whether you should register and why you should register, let's move forward then and talk about my previous question about documenting and certificates and whatever needs to be done in order to carry this out and have the requisite, proof.
Okay, so this gets complicated. It goes back to our previous kind of dichotomy that we set up, capital improvement versus taxable repair. You need different certificates, different proof for the different types of jobs. And not only do you have to think about what you're selling to your customer, you also have to think about what you're buying to perform that or to complete that task. So there's really two transactions that you're worried about. The retail transaction, the one to the end customer, but then also, I guess, what we can call wholesale, or the purchase of materials that go into that. If it's a capital improvement job, then, like we said, capital improvements aren't subject to tax. If I'm a contractor, I don't have to charge tax. But as a general rule of thumb, anytime you don't charge tax, when we're dealing with sales tax, we're worried about sales tax compliance, you need to have a reason. And perhaps more specifically, you need to have a basis for taking a position that you don't have to charge tax. And more often than not, that basis comes in the form of an exemption certificate. In the capital improvement space, that is a capital improvement certificate that the customer is going to give to the contractor, right? So they're going to say, the customer is going to say, I, customer, am saying that this is a capital improvement. I'm building a house. I'm building out a floor. Here, contractor, here is the capital improvement certificate. You don't need to charge me tax. And that's good, because that's kind of like a get out of jail free card for the contractor, assuming the certificate is properly completed, timely received, and accepted in good faith. Those are the three requirements of a valid certificate. That gives the contractor some coverage on audit. They have a certificate saying this is a capital improvement. So that's that side of the transaction for capital improvements. But then what about the purchases of materials? Well, we already said that those sales tax rules are kind of reversed for contractors. They can't buy things for resale. So contractors have to pay tax on their purchases of materials. There's nothing to give. There's no exemption certificate. They should be paying tax on the drywall, the nails, the paint, everything that goes into the construction. But what usually happens in these capital improvement is that, you have a general contractor, a prime contractor, but they don't do the work. They hire out to subcontractors specific parts of the job.
Right.
The foundation or the drywall or the woodwork, whatever it is. So you have these subcontractors coming in and performing a part of the service. And they too, because this is a capital improvement, are covered by the fact that their work is a constituent part of a capital improvement. So they, if they're smart, will get a copy of the capital improvement certificate that the customer gave the prime contractor, and so that their work is covered as well. And that is how you kind of document a capital improvement transaction. Josh, why don't you take us through a taxable repair, because that's the other side.
So a taxable repair, again, the rule is generally that contractors have to pay tax up front on materials that are used, even if the job turns out to be a taxable job, and then they can later claim a credit. So there's no sort of exemption that applies to buying materials. I mean, there are, we'll discuss in a second some of the exemptions for particular jobs that contractors can get a break on the purchase of materials. But generally for materials, you wouldn't be able to issue an exemption certificate. You pay tax up front and you claim a credit later for that sales tax if your job turned out to be taxable. However, if you hire subcontractors to do the work, they're technically performing a taxable service for you, because you're performing a taxable service for your customer, and it's a resale situation in that case. So for a subcontractor, a contractor is allowed to issue an exemption certificate to its subcontractor saying, we're purchasing these services for resale. And the form that's used is called a contractor exempt purchase certificate. And it covers that situation plus a whole bunch of different other scenarios that we can talk about.
The service is what's for resale.
Right.
That's really interesting. Is there any other context in sales tax where you can buy a service for resale?
Yeah, you can buy taxable services for resale and not pay tax on the wholesale transaction.
Okay.
And the contractor exempt purchase certificate, also called the ST 120.1, you're going to check box L on that thing, and that's how you get what would otherwise be taxable service from subcontractors to be exempt, or to document the exemption.
But there's also a bunch of important exemptions that apply to certain jobs. And I think we'll talk maybe more so about jobs for exempt organizations and how that works. But
yes,
what one exemption is that purchases of materials that go into a building for an exempt organization are non-taxable, with the idea being that you don't want to pass on this tax cost, because a contractor that has to pay tax on materials is likely going to pass that cost on in its bid, even if the bid is non-taxable to its end user, will pass on that sales tax cost. So there is an exemption for tax-exempt organizations having work done where the contractor doesn't have to pay tax on materials, and therefore it doesn't have to pass along that tax cost. Also, things like the installation of manufacturing equipment that equipment can be purchased for on a tax-exempt basis by the contractor, since the equipment itself is going to be used for a non-taxable purpose. So those are some of the other things that are covered on an exempt purchase certificate for a contractor.
There's actually, I think the last time I counted, 17 different types of transactions covered by that ST 120.1. I mean, everything from, like Josh said, the production materials and exempt orgs, but there's also much more esoteric things like if you're installing internet data center property, or if you are installing tangible property that will remain tangible property, like a fridge or something like that, or if you're involved in farming or commercial horse breeding. So there's all these kind of more esoteric transactions that you can actually buy tax-free if you're a contractor by using this certificate.
So Josh, you mentioned projects for exempt organizations. What are some high-level things to keep in mind when you're a contractor or subcontractor on a project for an exempt organization? Yeah,
so exempt organization projects trip up contractors. It's just another thing that trips up contractors because the rules change. The rules kind of change again. So if you think about a contractor who's working in New York City and building something for the Port Authority, building something at JFK Airport, this is property that's owned by an exempt organization, being either a governmental entity or a charity, or a church can be in the same scenario if you're building something for a church. So I mean, the first rule is that there's an exemption for the materials that are purchased as long as those items become an integral component part of the building. And that test is not really well defined. We know from rulings that it's not the same as the capital improvement test. So things like paint and caulk and anything that actually just attaches to the building will normally be accepted there. The other consideration on exempt organizations is that exemption for materials doesn't cover things like the purchase of scaffolding. It doesn't cover rentals of equipment, big cranes that you have to use to build the building. And so a lot of contractors get tripped up there. They just say, oh, well, the job is exempt, so everything that we purchase is exempt. But the thing that's important is there's a difference between being a contractor that can take advantage of that exemption and being an agent of the organization. So in some cases, and we haven't seen it a lot, but a governmental organization or a charity can actually just appoint a contractor as its agent, and then the agent steps in the shoes of the exempt organization and can purchase anything exempt, rentals, cranes, and all of that stuff. But a lot of contractors get tripped up on that and think that just because the job is for a tax-exempt entity, all of the purchasers are exempt. And we've seen, that become a 7-figure thing for contractors on audit.
Right.
Josh kind of alluded to the fact that we don't see too many of these agency transactions, but we really should, because the benefit really ultimately ends up with the exempt entity, right? Because then I've got to buy the hammer, the drop cloths, all this stuff, my tools that go into being able to do your job. I'm going to have to pay tax on all that. And if that's something I'm paying tax on, that's an item of overhead, that's going to be reflected in my cost to you when I bid the job. So if you make me an agent and then I can buy all those materials tax-free, that's a cost I don't have to pass on to you when I'm bidding out that job. So you exempt organization are ultimately going to save money on it. It's just a matter of getting them to see that and recognize and feel comfortable with it.
Is the process for making someone an agent relatively straightforward?
No.
It's a little difficult. There's a lot that you have to prove and establish. The way you invoice everything has to be a certain way. You have to have basically a special account from which you're drawing the money to pay for these items.
Let's be clear. We say you have to. This is what the state would like to have in place.
Right.
But there's case law out there that has confirmed that an agency relationship has been created when these specific things aren't in place. So, there's the hoops that you want to jump through to make sure that you'll have no problem whatsoever on audit. But then there's also just a little less formal agency relationship can be created and defended successfully. Do you want to take that risk is the question.
And there's a formal structure that is used a lot called the IDA structure, Industrial Development Agencies. So a lot of big projects get done under the guise of a local county industrial development agency that sort of gets involved in the project. And because of their involvement, the owner at the top is an exempt organization, a governmental organization. And in those cases, there's a formal agency relationship so that if you're appointed as agent of the IDA, you get to purchase essentially anything tax-free. So that's a formal version of the agency relationship.
It's a lot of stuff to keep in mind. Do you think that these developers, when they're putting in a bid for a new project, are like, wait, I got to call my tax lawyer. I got to make sure that this is all above board? Because my guess is it's probably not the first number on speed dial, but it sounds like maybe there should be a lot of consultation happening, or at least with an accountant at early stages.
Part of the problem is that, like we said, the rules are pretty much backwards, and they turn on a hair trigger. Slightest fact changes it. Oh, you got bad lease language. All of a sudden, something becomes taxable.
All right, we're going to break one more time here, guys, and pick this conversation up in part 3 of our episode on sales tax issues for contractors. Thanks again for joining, and we will see you in the final episode. Thanks for joining us for another episode of State Tax Talks. If you're interested in listening to more episodes, we're available on all platforms where podcasts can be found, including YouTube. If you enjoyed this episode of State Tax Talks with Joe Tantillo, please give us a 5-star review on your favorite podcast platform. And if you're in need of a tax professional, you can contact the tax attorneys at Hodgson Russ. Go to www.hodgsonruss.com for more information. And until next time, I'm Joe Tantillo, and this is State Tax Talks. Catch you later, tax fans. The comments contained in this podcast do not constitute legal advice. The opinions herein are the opinions of the speakers and not the official opinion of the Hodgson Russ Law Firm.